Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss Zillow's home value index, Redfin's rental market tracker, and the U.S. Treasury yields. Today is Friday, June 9th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Okay, hit the thumbs up as we close out another week here on the Hot Sheet. Let me know in the comments, of course, which market you are tuning in from. And if you haven't done so already, please sign up to BAMX. The link is down below. We did a live mastermind Q&A yesterday. And if you missed that and you want to rewatch it, you've got to get into BAMX. The replay is up in the community. So make sure you do that with the code HOTSHEET, where you get 15% off the annual subscription. So let's dig into home prices. We got another positive month over month home price reading, this time from the Zillow home value index. So far, looking like a normal year where we get home price increases in the spring season, despite Zillow's reading of 6 straight months from September through February where home values did not increase. Now they have 3 readings where home values are going up. Here is the numbers from the Zillow home value index. Came in at 346,856 for the month of May. Month over month is up 1.38%. And flipping over to this here, you can see the 6 months of September through February, where home values, according to Zillow's home value index, either decreased or were flat, like in February. March had a 0.4%, April 0.3%, and May 0.5%. That's on the seasonally adjusted number for the ZHVI. Okay. So Zillow's saying, along with obviously, there we go, along with Black Knight and others, that home values are up. We're obviously going to wait to see what happens with the Case Shiller reading. Some more data in this Zillow home value index. And this is good for, if you're working with someone who thinks there's some cliff coming, this is really good information to share with them, that there is not this potential cliff coming here, certainly not in the spring. In August, we typically get that seasonality drawdown on prices. So we'll see if that actually comes. But right now, as we are into June, we're in a more normal situation. Okay, so month over month shift here. As you can see, the red 2023 is grouped in with all these other years, right? So if you look back, going all the way back even to 2000, you have the majority of the years in this grouping here that home prices go up this time of year. And then come August, they start to level off into those winter months slightly. Okay. Last year, obviously in the purple, we were well above any other year in home price gains. And then we had this sharp decline before leveling off from August into the winter. That is in direct correlation to the 30-year fixed interest rate going up. This year, it looks like we're on trend to have a more of a normling, which means we'd kind of meet this mark here. Okay, so we'll see if that holds true. I do anticipate that Q4 could be a little bit bumpier, and we could have a sharper decline than the grouping. If I were to have a bearish outlook, I'd say we could follow more of a sharpening here, but probably above that purple line, just based off of everything that we are seeing so far. Okay, so normal year so far in the spring. Remains to be seen what happens with pricing. Now, if we look at where values have held, counties that are at pandemic home price peaks. So some of these home values that have gone up over the last few months in certain counties have actually gone all the way back up to the peak. You can see that's not the case in the West, but there are many counties across the Midwestern states, certainly East Coast and Northeast states. If you look at the Northeast, there's a lot of blue, which would suggest that those counties are back to their pandemic home price peak outside of the state of New York, which is not experiencing that. Also on the East, Florida is not experiencing that. They are below their pandemic home price peak in almost every county in Florida. Similar story for Texas, although Texas does have a spattering of some more blue. California has 0 counties that are back to pandemic level peaks. Okay. A shift in county home prices since the respective county peak shows you where you've had actual declines. Okay. 0% or higher. So meeting peak or higher is the blue, and then a shift down, where counties have actually lost value is in the red. So you've got a lot in Central Florida, a lot to the west, and certainly Texas as well for the states that have made up, and upstate New York is showing similar signs as well, where you've actually got those declines in counties. Okay, so now going back to regional home prices since the respective pandemic peak, and it shows a similar story to the counties chart that we just showed you. This is all fortune charts from Lance Lambert sourcing Zillow Home Value Index, which again, this Zillow Home Value Index was just released yesterday. Okay. Now we can dig into, if you want to throw a couple of your markets out there, we can dig into some of those on the ZHVI, Zillow Home Value Index, May 2023. We can go year over year, or we could certainly go month over month. So if you want to, let's take a look at month over month. Okay, Columbus, Ohio leads the pack according to Zillow at 2.19% month over month home value increase, with Cincinnati, Ohio coming in second at 2.16. Detroit, Richmond, and Milwaukee are the other 3 locations that are above 2%. Cleveland, Ohio would be next at 1.94%. Then Kansas City, Boston, San Jose, and Buffalo make out the top 10. Some of the month over month locations at the bottom of the list. Let's take a look here. Looks like it would be New York, New York. Okay, so New York just barely gained at 0.54%. That's the lowest gain of the major metros on the Zillow Index. And we've got OKC. Let's take a look at OKC, Oklahoma City. There we go. I can see OKC. Don't escape me. There it is, 1.37% according to the Zillow Home Value Index for the month of May. So 1.37 month over month increase from April to May for OKC. Milwaukee was one of the top 10, I believe. And Milwaukee comes in at 2.05% for a month over month reading from April to May for Milwaukee. Milwaukee is in the top 5 of gainers according to the Zillow Home Value Index. So if I'm looking at educating somebody in Milwaukee, a database, an email newsletter, Milwaukee makes the top 5 in home price gains. And then you go ahead and explain some of these home value gains for the Zillow Home Value Index. Of course, we've got all the charts here nationally that you can get that I just shared with you in our daily download. Click it once and get all of those downloads for today. We have 10 charts in there. Okay. So yeah, if I'm in the top 10, I certainly would want to highlight that. People love those listicle numbers, top 10 in this, top 5 in that, and share that with your community. The prices did not drop on a monthly basis in any of the 50 largest metro areas. So for anyone that believes there's this cliff coming, there's another data point. Out of the 50 largest metro areas tracked by Zillow, which accounts for the majority of the online traffic, they've got the most online traffic and a whole lot of data that they're collecting. 0 metro areas of the large metro areas actually fell in price for the month. The smallest gains were Las Vegas at 0.5%, New Orleans at 0.6%, Phoenix at 0.6%, Austin at 0.6%, and San Antonio at 0.7%. I think also New York was at 0.5% as well. So there you go. That's the Zillow Home Value Index report for May. We may dig into a little bit of that more locally on one of next week's streams. I do want to give a update on rental market. Okay, we've talked a lot about it this week in the stream as we lead up to June 13th and 14th, the FOMC meeting. We're hoping that Jerome Powell and his buddies are taking this data that we're sharing here on the hot sheet into consideration when they meet next week. Because if rent prices are coming down, we know that they make up the majority of inflation. And that means inflation isn't as high as the Fed believes, and it means it's going to drop hard, like Barry Sternlight says. I'm in the Barry Sternlight, the CEO of Starwood Capital, who models this across the country along with his 125,000 rental doors. I'm in that camp that when you actually have updated current rental data, inflation is going to drop hard. Nationwide, Redfin reported this morning. So here's an update on the Redfin reports that we've referenced this week. This was just published today. Nationwide rents declined 1% from a year earlier in May. That's the largest drop since 2020, as a building boom increased supply and economic uncertainty cooled demand. Okay, the median U.S. asking rent fell 0.6% year over year to $1,995 in May. It's the largest annual decline since March of 2020, when, of course, we got the Rona. That compares with a near record 16.5% increase 1 year earlier. May's drop also represented the first annual decline since March 2020 on a revised basis. The median asking rent rose 1.4% from a month earlier in May. Okay, in the West, asking rates declined 2.1%, asking rents, that would be nearly four times the national average. But other U.S. regions saw increases, with rents climbing 5.4% in the Northeast, 4.9% in the Midwest. So if we look at the charts that I shared earlier on the counties which are at their pandemic home price peak, that would be the Northeast and the Midwest, not the West or, Florida or Texas. So it makes sense when those prices for rent have gone up, because the home values are either at pandemic levels or above the pandemic peak levels in those counties. So, of course, the rents are going to be going up as there's no inventory, there's high prices, you got to find a place to live. And so that makes sense that in those regions that has happened. Rents posting let's go to the chart here. Rents posting the largest drop since 2020 in May. We've got that 0.6% decline. So there's a great chart there to show you that as this data catches up with Jerome Powell and the Fed, they could just look at the same report that we're looking at this morning before their June 13th, June 14th, but they like to use this outdated survey phone system where they call Americans at their house and survey them. So this started in the 1980s. They could just look at this chart. They could just tune into the hot sheet. Maybe if somebody's got Jerome Powell's email, just share the hot sheet with J Powell for me, so you can get this update. The typical asking rent was $19.95. What a good year 1995 was. Let me know in the comments if you missed the 90s. I certainly do. So that's off of the $2,053 peak that we hit last year. Rents are falling in the West, rising in other parts of the U.S. So that shows you the West in comparison to other parts of the country. If you're out in the West and you're trying to negotiate a rent or try to position a rent, this might be a chart to show them that, hey, rents are not rising here, as you might have heard in other places. Rent remains the highest in the Northeast and the West for total dollars. Median asking rent by U.S. region. The Northeast is $2,495 for the median asking rent. And in the West, it's $2,409. While you've got the South at $1,663 and the Midwest at $1,400. Those lines are relatively, they've gone up obviously since February 2020, but I mean the Midwest is relatively flat, and the increase in the South is marginal in comparison to the increases that the West and Northeast have seen, where they started at about $2,000 in February of 2020, and now both up 2,400 plus, and the Northeast almost at 2,500. Okay, so that's an update just off of that rental discussion that we've had throughout the week. If you missed any of the hot sheets, by the way, because I've had this question, we had this question in the BAMX community, the private Facebook group, which if you're not in that, you got to get in it. It's unbelievable. I mean, just the Facebook community alone is worth the subscription. You get 15% off of the annual. It comes out to less than a cup of coffee a month. That doesn't, I mean, you also get the courses and all this other stuff. But anyways, we had a question in the Facebook group about can I find the hot sheet on Spotify or on Apple? You can. So if you're somebody that typically listens to the replay, or if you like to go live on YouTube, but you missed it for that day and you want to consume it, go over to Spotify, go over to Apple. If it's something that it's easier for you to listen to on a walk or in the car, Hot Sheet is both on Apple and Spotify. I'd love for you to leave a review with your thoughts on either of those audio platforms. A review would mean a lot to this show if you could. All right, let's go to the Treasury yields update as we're going into the big week next week with the June 13th and 14th FOMC meeting. Treasury yields are on the rise today as investors look ahead to the monetary policy next week, where we will, but the officials will announce a fresh interest rate decision, a freshie. At 7 a.m. this morning, the 10-year Treasury yield was up more than 4 basis points. We're obviously going to update that here in just a second. The 2-year was also up more than 4 basis points. So investors are weighing what could be next for interest rates ahead of the Fed's meeting next week. Uncertainty about whether the central bank will continue or pause its rate hiking campaign has spread in recent weeks as both Fed officials and economic data have provided mixed signals. What we've seen out of the last couple of meetings is that the 10-year typically does go up as this uncertainty kind of captures the market. And then Jerome Powell goes and gives his speech. And then within days or even hours, we've seen the 10-year drop. And as that 10-year has dropped, we've seen in the week and 2 weeks after these meetings, the 30-year has pulled down. You can't guarantee that to a buyer, but that's just the trend we've seen the last few meetings. Of course, today the trend is that the 30-year fix could be higher by the end of the day, as our current 10-year actually has us up over 0.05, so 5 basis points plus. So that's even higher than the 7 a.m. reading that I just referenced, and that's on the current reading as of this live stream now, just before 10 a.m. Eastern time. The 30-year fixed rate yesterday came down a little bit from the day before, from 6.94 down to 6.9. So we got a 0.04 percentage decline yesterday on the 30-year. Signs are that this may go back up. Hopefully we don't hit that 7 number and we can actually just go into the weekend without that. Okay, we've got a Knowledge Brokers podcast today over at Knowledge Brokers Podcast on YouTube on the channel. Just about to hit actually 1,000 subs over there. If you wouldn't mind going over there and giving that a sub, if you're into Knowledge Brokers Podcast, we'll have a new episode with myself, Lisa Chinati, and Tom Toole today at 2 p.m. Eastern time, where we dig into deep onto all of the week's trends that we've been talking about here on the hot sheet, and spend a little bit more time going through all of that. Hope you guys have a great Friday and a great weekend. Thank you so much for being a part of the hot sheet experience. If you want more of this, make sure you are a member of BAMX, and I will see you guys on Monday. Until then, toodaloo.